welcome to Trade Parade. Today we're going to look at the Bitcoin price on the daily. The daily is a great time frame to do Bitcoin analysis. Uh, you could do the analysis on the daily, and you could trade on a smaller time frames, but use the daily to give you a more accurate reference of what the bias is for Bitcoin. So let me introduce you first to the first uh, to the two indicators that I use. I use the Lorentzian classification indicator with all the filters turned on, all of them, and I keep just the actual kernel, the EMA, and I get rid of the bar color, the price, the bar prediction values, and the ATR offset. So you end up with just a simple EMA that turns colors when the signal is triggered. So accompanying or supporting the this Lorentzian classification EMA, I use the squeeze momentum indicator. I only use the the histogram part plot, and I disable the second part, right? Because the second part could be confusing and is not as accurate. So it gives you it just makes things harder. When trading, you want to keep things as simple as possible, okay? Because when you have a bunch of signals, you're gonna get paralysis by analysis, and that's not gonna get you anywhere. So the other thing that I do too, as you can see, uh, the histogram when it starts dwindling in strength, this should have been light green. But for me, that is since I use it as a trigger for an exit. For example, let me give you this last trade that was triggered as a long here. It's a two criteria. I use the EMA, the Lorentzian classification EMA here. It needs to be green, right? And I need to have a uh, dwindling or a diminishing bearish strength. So it's green, right? It could be on the opposite side or it could be on the upside. But as long as it's green, then I use a green candle and a green EMA. So it should have been here, the the entry. So going from this entry here, this candle here, and we measure up to our exit. Our exit is two red momentum candles. In this case, is this one right here. So the exit was right here, and that was a over 10% gain. Okay, and that's a complete exit. It's a complete exit. It's intraday. Uh, it's a few days, several days actually. A trade. So you gotta be patient. Okay. And on this one, I should have been by theory, this is where the human factor comes in because you're not you're not just relying on the pure signals of your indicators of your strategy. Here, if I was going by the just by the rules, right, with no other interpretation, personal interpretation, I should have been in a short, right? When the EMA turned red and the momentum turned red, and even the momentum flipping bearish, that was a clear signal, right? But we're not taking we're not taking this short. You know why? This is why. Because you could clearly see that this chart is still bullish. So what that means is that this chart, regardless, is still in an upward trend. You know, it's close to breaking maybe, but the chart could clearly just make a small move to the bottom, right? Could be something like this, double bottom, and it could start shooting up. So you don't want to be caught up in this small retracements, because look, this was a small retracement, this one here, and if we had taken this short, which I didn't, let me show you, you would have been in a negative, because based on my rules, right? So you enter on a red candle, on a red EMA, and then a red momentum, or a red histogram, bearish histogram flip. Uh, this would have been the entry, and the exit would have been two bars, two green bars, right? And that would have been a negative 4.7%, right? So that would be a nice chunk of your capital, your trading capital. So we don't take those. We don't take those bearish. We don't take those bearish, unless we have a clear lower high and a clear lower low, right? A clear break. This was a clear break. This was a break and a retest. Break, retest. So here we could have taken shorts, right? So, but in this case, we're holding to take a long instead. When this when this momentum here starts, bearish momentum starts dwindling, and the bars start turning green here, right? And then this EMA starts turning green, turns green, and the price is over, or above the EMA. We could start looking into entering a long to the top here, all right, and exit on the first two red candles. So given given that that we're still bullish, we are looking we are seeing right now, we're looking at the price coming down to hit this um, unmitigated, let's see, this unmitigated terrain, this bar right here. This right here too is a possibility that it hits this one right here. So this one is already taken. This one is already taken, because this bar is low enough, is at least 50% of this bar. So this one, it could just be considered as an order block, right? This one, it's not reliable either, because if you look to your left, there is a lot more activity here. So why I wouldn't say that this is an unmitigated order block? Because it was already previously an unmitigated order block, and it was mitigated by this wicks here. So we had the the gap here, the block, and it was hit once, twice, three times, four times, and then this bar right here, this one, is the one that was showing bearish signals already. Because if it was bullish, this price should have gone up, down, up, right? In that manner. But the price, what it did instead, the market went and faked people out. Because look at this bar here. It was looking bearish. People went short, and when people started going short, plus the 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 the, the stop losses that were under this and under here, um, were taking, then that created enough liquidity to shoot the price in the opposite direction, right? So all that to say that this block here, it's already mitigated with this activity to the left. Okay, so this is not reliable. This is not reliable. So don't count on this being taken. What I count on being taken is this one, which already did. This was already taken. So it's not safe to go short when the price has hit one fair value gap, and it's probably about to wick down to this other one here. So it could wick down here and play here, play a two touch or three touch, or it could even, go down here, fake this low, right, and take the liquidity of this low and create an ABC, and then shoot back in the opposite direction. So if you're a buyer, you should be looking, on this area here to buy. Okay, and here, definitely you don't want to take any shorts because it's too late. It's too late to take shorts. Okay, so this is what I'm looking at for the next few days. It could be a week. The price could easily spend a whole week on this area here. Okay, so no shorts. Be patient. I would be patient and look for longs here, and then let's look at uh, the possibilities of where this price could go. And if you look to your left, what do you see? Nothing, empty space. What does that mean? Well, that means that the price is the Bitcoin prices and discovery. So it's a new territory. So we could have a pump that you've never seen before. It could be consolidations. It could be sideways. There's no reference to your left. So that's why having a strategy, a take profit strategy, is beneficial because no matter what happens, no matter what the price does, you're still gonna take your profits, just like I did when I took this long here. When I took this long here, I took the profit 2 bars of the squeeze momentum in a dwindling uh, direction, right? I took the profits here, and I've been holding off. I've been holding off. I didn't take this long because the squeeze momentum was indicated that the strength was dwindling. So I didn't take this long here. I didn't take this long here. I waited, right? I didn't take this short either because I'm not going for a small profit that that is gonna give me an exit signal when it's already on the negative, right? Let's say that the signal there's sorry, that's the wrong one. Let's say that I get a green bar. It's possibly that we get a green bar that looks like this. That's a horrible bar. But a bar that looks like this, and it takes all my profits plus a negative. And I want to follow my rules, right? So I need to exit two green candles, two green candles on the squeeze momentum. So that would have put me in the negative, at least 5%, at least 4% in the negative. So see that the interest should have been there. And if the exit was a big green candle to the top, you don't want to be caught up in the exiting in a big green candle to the top because you're shorting you're shorting just a small retraction. You know, you don't short a small retraction. Just be patient. Just be patient. Don't short this small retraction because we are overall long. You know, look, like the way you have to think about trading is you got to think about like how much do you can make in a year. You know, if you can make uh, $10,000 in a year, is that a supplemental income? Yes. If you make $20,000 in a year, is that supplemental income? Yes. If you make $24,000 in a year, that means you make around $1,200 a month. That is good money. You could pay rent. You could pay the bills. You could pay car insurance. You could pay most of your bills if you live modestly, right? You could pay a good amount of expenses with $1,000 a month. So think about it like that. If you could catch several good moves during the year, several 10% moves during the year, and you're able to manage your capital and reinvest into your trading account, you're going to be in good shape. So just be patient, and I'll see you in the next video.